Hi guys, it's me again, Tony Lim, and today actually I would like to take this very quick videos and to share a little bit about the press release from yesterday from Federal Reserve Yellen regarding and pertaining to this interest rate decisions and what is the impact to our stock markets and what should we actually react, especially in such moment, and to prepare for the next 2017 years as well as 2018. Well, so at the beginning stage, we do need to actually come across and to take a look for what yesterday night Yellen has mentioned, whereby is the Federal Reserve, for our information, is they already decided that to remain the interest rate unchanged in September for this month. Well, so from yesterday, right, what Yellen has mentioned is she decided that the market itself currently is still yet to go through interest rate or increase the inflation is yet to go to this target whereby they have been set it very long time ago. So in order to understand that what is the impact of the stock market in the upcoming stock market from this interest rate decision, then we need to understand what Yellen has mentioned from yesterday night, which is in Asian market time, while we're sleeping. So what is the information that she has mentioned? Well, I will make a summary for what she had talked about. Okay, so Yellen actually has mentioned that currently she yet to increase the interest rate, decided to increase the interest rate. The reason is because, number one, we can see the US, the employment, the workers is there very positive that they would like to go and look for a job, not like last time, whereby they just do not so positive about the economy in US. Okay, so this is number one. And number two is Yellen itself has mentioned the US inflation is one of the most important benchmark, that is the radar detector that is used for them to decide whether they want to increase the interest rate or not. And for this period of time, if we actually gone through this what we so called inflation in US is about 1.1%. Okay, so from July it's about 0.8%, and it has been raising about 0.3%. Okay, it's very obvious. And why this 0.3% increment is actually emerged is because we can see that there's a rising into the new home sales in US. This is number one. And number two is actually we can see the medical costs is actually have been raised from these few months in US itself. So this actually causes the inflation rate in US increase. Okay, so has increased. So no matter how, in this 1.1% is yet to actually intact or actually enough for Yellen or Federal Reserve to decide that they wanted to increase the interest rate. Okay, this is the reason why they yet to increase the interest rate. So if we actually wanted to understand what is the benchmark and the radar detector, although that Yellen never mentioned at all which what kind of interest rate the targets that reaches, then they will decide to eventually increase this interest rate to their so-called their ultimate targets rate. And here we have to actually look back from about 100 over years roughly, start from 1914 to 2016, okay, 2016. And if we actually gone through the about 100 years approximately for the inflation in US, average we can calculate that it's about 3.29%. So what does it mean? So it means average inflation in US at least must be at 3.29%. And right now, the inflation currently is 1.1%. So it's still got how many percent? We do need to actually reach it. So at least that we can actually raise the interest rate. So probably about 2.1%. So in my own opinion, it's roughly according to history for about 100 years, then Federal Reserve they might be actually thinking of to raise the interest rate to their targets, their ultimate targets, okay, so that will impact the overall economy, so probably about 3.29%. Okay, so no matter how, but one thing is very important, is no matter, even though that Yellen is yet decided to increase the interest rate because he want the economy to move in a moderate basis, that is going basis very slowly, and she doesn't want what has happened into 1997, 2007, that the market crash, or even 1929. It's really very dangerous. And if such scenario happens, right, a lot of people will decided not to not to actually go to actually look for a job. The reason is because the job opportunity is not so much, and it's not they do not want to work. It's because they cannot find a job. It's like a deflation. Okay, it's like deflation. So what happened is that if such scenario really happen, then it will be very bad to US, and of course it will contagious and will influence a lot of Asian market, like in we can say in Singapore markets and even the Malaysia market. So this is one of the very important things that this is the reason why Yellen decided not to increase the interest rate at this moment. So according to Yellen, the radar detectors for them to increase the interest rate, it could be roughly will be detect on the so-called in the moderate basis. What I mean is that they will increase slowly the interest rate. Like example, probably it will be like 0.25% to 0.5%. They will not be suddenly increase like 0.8% such, because it's really very dangerous. It will causes the overall stock market crash and plunge the whole overall economy, the Asian market will go into effect. Okay, this is the number one that we do need to actually pay a very serious attention to what is the impact. Okay, so this is what actually happened yesterday. Okay, the interest rate period is not going to increase for this month. So no matter how, they were going to increase. They got no choice that they have to increase, perhaps maybe in the end of the year. But by 2017, in my point of view, they were not going to have a lot of turmoil in the economies, and we can actually safely invest, and also we can safely look for a penny stock to trade. And this I will share a little bit about what is the so-called the activities or the so-called the methodology that we can use next year, which is 2017. Okay, so in short to say, if that is a decision from Federal Reserve that they were not going to raise the interest rate so high at this 2016, and 2017 perhaps it will be very smooth in the stock market. And 2018, that years with 2018, that would be we need to pay a little bit of cautious. Okay, we must play very cautious. The reason is because according to 2007, 2008, if we plus 10 years or even use the 2008 for the so-called the myth of the economy itself, it could be have a plunge at 2018. So this is number one. Number two, Yellen, right? By 2018, according to my analysis, perhaps they might increase the interest rate to a higher level in 2018. Okay, so why? Because just now we have mentioned they decided to make 2016 to 2017 to move in a moderate basis. According to yesterday night, they are sharing into the meeting itself. So if that's the case, then what kind of strategies that we can actually adopt and to use it into 2017 or even 2016 by now we still got 1 quarter to go, like because now it's September, we still got 3 months, right? So probably about a quarter again to invest. So what's the methodology? In my point of view, is we can use 2 methodologies in our stock markets. Number one is we go for scout for those penny stock, and we can slowly. But the penny stock is very important. Is if I have a very good fundamental. This is very important because we have to really go to a short-term trading, but in the more safe, more safer, conservative way, because it could be have the crisis anytime, like along the way from 2017 to 2018. It depends on Yellen, the Federal Reserve, the decision of interest rate, right? So according to that, if we found a good company whereby it's the penny stock and their share prices is really very low, then we'll be very safe. This is number one. And number two, if we have to really start to look for those undervalued stock, which is adopting all those Benjamin Graham or Warren Buffett or even Peter Arthur Fisher's all their methodology, which is to use the value investing way to look for those cheap stock, and we start to actually calculate the margin of safety and the buffer of security, which I've shared in my first book, the Powerful Value Investing Formula. So that will be the very important way for us to actually invest. So what can we really actually use the way that to to invest by 2017, okay, to this 2018 is number one is we just now mentioned is we go for this penny stock methodologies to look for a good stock, and then after that what we do is we calculate the company must be in good conditions, like example ROE is more than 15, then a P perhaps is like lower than 10, okay, roughly, or 15, within 10 to 15. And the second way is value investing. So value investing is very important that we can start to adopt all those strategies to look for those cheaper stock. And just take an example, if we calculated a stock is worth $10 and right now it's selling for $4, it's perhaps the high price is $7 and crashed to $4. So we start to get in, perhaps our capital is like 60%, we can go to this value investment, and another 40% is we use it for trading. Okay, we trade on those undervalued stock. Okay, how are we going to trade? So that will be my strategies, which I have shared in my first book, which is the Powerful Value Investing Formula. I show a little bit on this book to introduce to you. The Powerful Value Investing Formula, you can get it from MPH right now. So in the books, actually I share the value box trading system, whereby we already calculated that it's the $10, right? And right now they're selling for $4. So along the way, from $4 to $10, they will not go into straight line. They will go to a fluctuating basis. So 60% we go for $4, and another 40% we trade along the way. So let's say that if we bought it at $4, then it go up to $5, and it actually reaches to a top for resistance and start to retrace. Like, we can use a lot of methods to use, like a lot of indicators available in the marketplace, like stochastic, RSI, even Fibonacci and more. So we can really use the SRA technical spaces from book I share. So we actually get out on that because it's a long story. I don't know how to actually explain to you. You can go through the books and read it and sell it on the resistance itself, and once it go down again, then we buy it again. As long as it's within the $4 and the $10, then we can do that methods and consistently do it the same thing, the same process over and over again until the stock prices reach to $10. So the 60% we already benefited because we use the value investing. So the $40, right? The 60% we already benefited because eventually we got the $10, right? So the 40% itself, after we trade along the way, then we will have some profit, right? So we do not need to wait until he really materialize the overall profit to say like reach to $10, then we take all those profit and dump it into another value investing. Don't need. The same stock, 60% we put in the value investing, the 40% is we trade, right? So the profit that we get, we can transfer it and shift it to the value investing, the 60%. So we increase the capital from the 60% for the value investing itself. So sooner or later, we will find that our fund will be growing very, very fast. So this is one of the way. And in the history of times, if we missed out on 1997 or 2007, and this will be the time for us to actually, it will be happening in history, that we can actually benefit and use this way to do it. Okay? So from that itself, I would like to introduce to you, take this opportunity, if those of you actually in JB and Johor Bahru in Malaysia, and 24th of September, I will be actually sharing for the Tortoise investment methodology in one of the office, and I will be there to share with you the way on how to use this method to actually profit in the stock market. So I hope to see you guys, and before that, I would like to share a little bit of my new books, and I hope that it will be benefited to you and bring some value to you. And this will be my new book, which is How to Build My Own Cash Machine Through Stock Investment. Okay, so this will be a very powerful book, which is in my history of life that I actually wrote it. So it's very thick, this book. So actually I adopted a lot of very good strategies on stock investing, which is I have learned from all those very successful which is value investor. Like I actually learned from Warren Buffett, how they use their methodology, or even Benjamin Graham's, all that. So this is really a very powerful value investing way they are using. So if you are using that method, which is from them, then you will be very safe. So in short, that I hope that this video will bring you some of the benefit about what's the impact on the Federal Reserve interest rate decision in the upcomings in the stock market. And I'm very pressed to say that just now the two methods that we can use most probably in the Asian market, it will be especially it will be in Singapore market and Malaysia market. So use it correctly and use it effectively. Trust me, you will get the benefits. At the end of the day, you will be profiting, and you will be actually happy and with all the profits that you have generated along the way for these few years. Okay, thank you. Thank you for watching WCTY Trading channels. Okay, thank you so much.